No one's ever gone bankrupt without any debt. Now that would take a real, I think you have to give some kind of distinguished service award to somebody who did that. But they had no debt, and I said, it's not going to go to zero. You know, I was wrong when I said it can't go below 15. So we hung on, and within 3 years, they gave out the shares in Kaiser Steel, gave out the shares in Kaiser Cement, gave out the shares in Kaiser Steel and aluminum, and they sold off all the businesses. You got about $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying how much lower can it go, when it went to 9, went to 8, you would have gone. So you can't just say it can't go any lower, because I saw Taco Bell go from 14 to 1 in 1974, and they had no debt and making 60 cents a share. What I'd like to talk about is what I call the 10 most dangerous things people say about stocks. Here's a good one. If it's gone down this much already, it can't go any lower. I remember when Polaroid went from 140 to about 107, people said if you ever get Polaroid under 100, you got to buy it. You just back up the truck, buy the stock. You know. Stock you get to 110, then rally, fall 103, you go 112, go 105. They said gets under 100, buy Polaroid. Polaroid broke 100, people started buying it, and within 9 months the stock was 18. No one's ever gone bankrupt without any debt. There's a corollary to that that's even more dangerous. Philip Morris sold for 12 cents in 1951, and then it goes to 60 cents in 1961. How much higher can this go? It's gone up fivefold. They missed the power of Marlboro. They missed there's 220 countries in the world. They missed the cash flow of the company. They missed everything. This stock was a 100-bagger after going up fivefold. But people sold it just saying how much higher can it go? Just saying it can't go any higher. It's gone this much already. That's very dangerous, and don't use that one. And it's a very bad thing to do. Eventually, they always come back. Here's another one that sucks. That's a technical stock market term we just use only in the stock market. They don't have to come back, but they say eventually they always come back. Not true. Here's a great one. It's $3. How much can I lose? This is a great one. Because get out. This is I don't have a computer and I can't do high-level math, but just do this one. So let's say your neighbor buys $10,000 of a stock at 50, and the stock's now 3, and you put $25,000 in at 3. If it goes to 0, who loses the most? A lot of people cannot answer this question. You know, I mean, if you put $1 billion in at 3, you can lose $1 billion. I mean, they blow taps in lots of companies every year. You know, they can go to 0. Here's a good one that helped me a lot. It's always darkest before the dawn. This business is terrible. It's awful. You ought to buy the group. This is not a good way of making money. In 1982, there was 11,000 of those oil rigs drilling those holes all over Oklahoma and Texas and Colorado. We used to have the rig count every week, and the rig count fell from 11,000 in 82 to 6,000 in 83. Well, the rig count was only 1,000 3 years ago. So it went from 11,000 to 6,000 to 5,000. Then 8 years later, it was under 1,000. The industry really started to turn about 2 years ago. So just saying the business can't get worse. I was lucky enough, in addition to having the metals industry when I started Fidelity, I had the textile industry. These people have been through recessions, depressions, world wars. They've seen it all. There's a great expression in the textile industry. It's always darkest before pitch black. Now that's a good one to remember, because when business is terrible, it can get considerably terrible. It can get terrible to the power of 6. And when I rebound to 10, I'll sell. Here's a great rule. Somebody buys a stock at 10, and it falls to 6. They say, if it gets back to 10, I'll sell. Now, I think the math, 4 and 6, I can handle this level math. I think that's about a 66% return. You ought to buy it. If you think it's going back to 10, you ought to buy the hell out of the damn thing. But they think if it gets back to 10, I'll sell. Now, what you ought to do is never put down a round number, because I think for the next 26 years, this stock will go between 5 and 9 1/4. It'll never get to 10. So maybe put 9 1/8 or 8 3/4. But just saying the stock, if it gets back what I paid for it, this is a very important rule. This is one of the key rules. The stock doesn't know you own it. Remember that. But people treat stocks sometimes like their grandchildren or a puppy. I mean, they think the stock knows who you are. Let me worry. I own conservative stocks. I don't have to worry. I own conservative stocks. I remember when Con Ed fell 80%, then tripled. So just because you inherit some stock and it's so-called conservative, Like Eastman Kodak fell 75%, IBM fell 75%. Don't tell anybody you own a conservative stock. Companies are very dynamic. I don't buy that argument. Here's a very dangerous one. Look at all the money I've lost. I didn't buy it. In the 13 years I ran Magellan, I listed, I think about 200 stocks, A through L, on the New York Stock Exchange. They went up tenfold or more that I didn't own. And people worry all the time about missing Microsoft, missing Western Digital, missing United Airlines. They spend all their time worrying about stocks they miss. You cannot lose money in a stock you don't own. That's a very important, the only way to lose money is buy a stock, have it go down, and sell it. That's the only way. I missed that one, I'll catch the next one. That usually does not work. Buying the next of something usually doesn't work. It's very bad. It's like buying on dips. I think it's always better buy from dips. I always thought it was a better rule than buy on dips. You may have to explain this to some other people. This is another technical term I may have to explain after hours what a dip is. Stock has gone up, I must be right. Stock has gone down, I must be wrong. I'm convinced that people do this all the time. They buy a stock at 10, they buy a little bit of it, it goes to 13, they now say they don't know anything more about it than they knew when they bought at 10. They have no idea what this company does. It's gone to 13 now, they take a second mortgage in the house and buy it at 13. The best thing that could happen for us is to go directly from 10 to 4 for this stock. So it's going to go to 4 eventually, but it goes to 13 in the middle. They're convinced now, they bought 100 shares at 10, now they buy 20,000 at 13. And all the fact is the stock went from 10 to 13 is it went up. The average movement of a stock on the New York Stock Exchange this century, between its high and its low, has been 50%. The average stock on the New York Stock Exchange. So stocks go up and down a lot within a year. And say this stock is going up means you're right, doesn't mean a damn thing. Avoid long shots. These are the companies that, we have this very technical term for this called whisper stocks. You know, these are the stocks that are going to grow hair and make your kid have better spelling, but they're missing, they don't have any sales yet. You know, that's the missing element to the story. The story is sensation. There's no profits here, no sales yet, but my God, if this works, it's going to be the next Xerox, you know, and it's going to help Murr in space and everything. You know, it's a very, very good deal. Now, this is not a long shot. This is a no shot. You have to separate these out. I've tried 30 of these. I have never broken even on a long shot. Never. I've made 25, 30 times my money on some stocks. I never thought about Sallie Mae or MBIA or Fannie Mae or some of the banks or Stop and Shop. I'd make 20 times the money, 30 times the money. I had no idea. I thought the stocks were going north. I had no idea. You look back 10 years later, you say, my God, I made a lot of money in this thing. The ones I went into thinking I could make 4 times my money, I've never broken even. If a stock's 3 and it has huge potential, write down the story, take the stock symbol. If it's going to 300, it's okay to buy it at 15. Check in later, check a year later, see if it's still listed, see if you still get a quote on it. See if they still have any earnings yet. But if it's going, write the story down. Some of these work, I haven't heard yet, but maybe they will work. But it's worth tuning in 6 months later.